This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora, and welcome to Monday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news we may now be much closer to rate cuts in some major economies. But first this week, we're looking at some big set-piece data and policy items from the US, mainly at the end of the week. The week will end with their non-farm payrolls, and another 185,000 gain is expected there. Before that, Thursday's US Fed decision will no doubt give some greater clarity as to when their rate cut is coming. Labour and inflation developments should allow them to signal that a cut is very possible at the following meeting in September. And the upcoming third week of their second quarter earnings season will be full of majors reporting. Elsewhere, there'll be important data coming too. Japan, Brazil and England will deliver central bank rate reviews. CPI data will come from Australia, the EU and South Korea. And the second quarter GDP will come from the EU. And there'll be a wider set of PMIs for July released, including from China. And over the weekend, China said profits earned by their industrial firms rose by 5.6% in June from the same month a year ago, but that was a weak base. From June 2022, they're actually down 8.4%. These latest figures come amid a fragile economic recovery in the face of sluggish domestic demand, deflation risks, and a persistent property weakness. Profits in state-owned enterprises rose a mere 0.3%, while those in the private sector continued to rise up 6.8%. Although we should note that steel rebar prices have sunk to their lowest level in over 7 years amid poor demand and ample supply in China, we also need to know that the Chinese government mandated fresh quality standards for steel rebar to start in late September. That drove mills and traders to flood the market with old stockpiles before the new standards for the metal are applied. Export rebar will be unusually cheap at present. All this is coming while their general economy is weak. And staying in China, they have some other rather serious flooding problems. We haven't made a big deal about these because it happens every year, but this year is extreme, even for them, and it has come earlier. Beijing is worried and has had a special meeting about these risks. Also unusual is that they issued a statement after that meeting. Quote, China's climate conditions are abnormal, with frequent and prolonged heavy rainfall, early and rapid development of river floods, and some areas repeatedly hit by heavy rains, making the flood control situation severe and complex, they said. And this is just a guess on our part, but the Chinese data for foreign direct investment is unusually late for June. Perhaps it doesn't look too good. In the US, their annual PCE inflation rate released over the weekend eased to 2.5% in June from 2.6% in May, in line with market forecasts. The month-on-month change was minor. Their core PCE rates are marginally higher than the overall rates, but trending lower too. Markets are assuming the US Fed will like this data and reacted accordingly. And inflation expectations in the EU area remained unchanged at 2.8% in June. A year ago, these inflation expectations were running at 3.5%. Inflation expectations in the euro area have averaged 3.4% from 2020 to 2024, reaching an all-time high of 5.8% in October 2022 and a record low of 1.9% in October 2020. The Russian central bank hiked its policy rate 200 basis points to 18% over the weekend. This was not unexpected, however. They are seeing domestic demand outstripping the limited supply capacity the Russian economy is able to offer, triggering aggressive inflationary pressures and warranting higher borrowing costs. Beside the pressure on supply capacity from Western sanctions, they also noted that labour shortages are building fast in the fallout from the military mobilisation and the resulting sharp diaspora of working-age men. The US Treasury 10-year yield is now at 4.20% and unchanged from Saturday. Week 2 of the Wall Street earnings season shows that more companies are delivering earnings results above analyst estimates, but investors are rewarding that outperformance less than they usually do. And the price of gold will start today with a small $3 shift up from Saturday at $2,386 an ounce. Oil prices are 50 US cents softer at just over $76 a barrel in the US, while the international Brent price is just over $79.50 a barrel. These are the lowest levels since early June. And the Kiwi dollar starts today marginally softer at just under 58.9 US cents. A week ago it was at 60.1 US cents, so 1.25 cent lower since then. And that is 3.4% lower since the start of the month. Against the Aussie, we're holding at 89.9 Australian cents. Against the euro, we're softish at 54.2 euro cents. That all means our trade-weighted index starts today at just on 79.9 and unchanged from Saturday, and near a 2-year low. This is down 110 basis points since the start of last week. And the Bitcoin price starts today at $67,772 and up 0.4% from Saturday. A week ago, this price was $66,552, so up 1.8% since then. Volatility over the past 24 hours has been modest, at just on plus or minus 1.8%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.